The derivatives market have a very interesting play in the global economy, being over $1 quadrillion. Yes, I said that, 1 quadrillion. Some financial analysts actually think that it's 10 times GDP, so global GDP, and then other people say it's vastly underestimated. So today we're really going to dive into a project called OILER, and this specifically goes after the oil section of the derivatives. And if you don't understand derivatives, basically it's basically an asset of an asset. So it's like futures of an asset. So it's a derivative of the actual asset price. So gold, silver. You have the stock market. You have the real estate market. You have all these different countries. Bonds. You have even in now getting derivatives in the crypto space. So that's what I think is very, very interesting with this project, and it has massive, massive potential because guess what? It hasn't even launched yet. So this is an opportunity to learn about a project where typically we're talking about these altcoin projects or even things launching on things like Polkastarter or a ducked out dime that are basically launching, so private sales. And with this, it's a project that's being built that hasn't been necessarily tokenized yet. So it's very, very interesting to learn about OILER. And it was also covered on Elio on Trades crypto channel. So recommend that out. He has a great channel, so Elio Trades. But this is very, very fascinating because, again, the derivative market is huge. It's literally the biggest market there is. And if you want maybe a video just on derivatives, if you don't fully understand this, I can do an in-depth video. It would take maybe too long to explain in depth, but as long as you understand, the market is about 1 quadrillion, but it's not exact. And some financial analysts say it's more, some say it's way overvalued, and that's a lot less. So it's a very, very fascinating space because it's kind of, it's how, when you get into this world of investing, derivatives weren't necessarily a possibility before you could lend out as many things. So again, it's a whole nother interesting topic, but in the history of finances and economies, derivatives play an interesting role in kind of this transformation into exponential GDP. So let's dive right into it. The Euler vision. Really what we'll be covering is this incredible article on Medium that really, really dives in depth on this project that's still in beta. So what is Euler? Euler is a protocol for blockchain narrative derivatives. As we said in the beginning, derivatives are a giant market, and what the blockchain does is it allows you to not have to trust anyone as far as what data you're getting. So one of the big issues that oracles solve is they connect to data feeds. But something that we actually covered in our API 3 video is that something like Chainlink or other oracles that have a problem is they're basically exposed to human errors. So humans having their own personal interests in mind in kind of changing these data feeds to fit their personal needs or biases. Whereas with API 3, where you have a decentralized version, it's basically eliminating the middleman. So eliminating the possibility for human error. And that's basically what the blockchain does. It allows you to not have to trust, all humans are fallible, and even if you may trust like a financial advisor or a banker, which I personally don't trust a lot of bankers, but even if you do, it removes you even needing to. So that's the incredible thing with API 3. And I think this merging of derivatives, this giant market, and blockchain is absolutely incredible. So at Euler, we have in mind a very specific set of properties to call instruments blockchain native. This instrument can be priced without any external off-chain oracles. The instrument can be settled without any external off-chain oracles. Okay, so that's pretty interesting. So it can be priced without any off-chain oracles and can be settled without any off-chain oracles. So that's very, very interesting. So they go on to say before 2019/2020, it was practically impossible to deliver blockchain native derivatives. Without stablecoins and AMMs, which are automated market makers, it was not possible to provide a reliable pricing solution. So they kind of go on to say, what's changed. Stablecoins have introduced a non-volatile on-chain base for pricing, a USD peg, and AMMs, automated market makers, introduced a pricing discovery mechanism on-chain and with high volumes. It has also been proven that if the markets are efficient, then the automated market makers are efficient to an arbitrators, arbitragers. So basically what arbitragers are is like somebody who sees price is low on one exchange, price is high on one exchange, price is low on one exchange, price is high on the other, and they're buying the asset on the exchange that's low, selling on the exchange that's high. So
they're basically, having the same asset, not even worrying about the price, but they're literally just arbitraging the difference in price on two different exchanges. So let's see, we'll set the price right. All right. So in order to settle derivative on chain nowadays, let's see. In order to settle derivatives on chain nowadays, we need to ensure that the payout can be calculated entirely on chain. At Euler, we not only assume that we will not take off chain data, but also that there is no oracle hidden behind the layers of on chain data sources that our smart contracts use. It means that the prices of the underlying instruments should not be derived from the protocol that uses off-chain oracles. Moreover, it is desirable to avoid any on-chain oracles like Uniswap, since they can always be manipulated within a flash loan-based attack. That's pretty interesting. So to avoid these, that's interesting. So the last requirement is much stronger, but still holds for the initial set of Euler products. So man, this is so fascinating. So we can achieve that for the class of underlying instruments that we build our derivatives on, blockchain parameters like hash rate. So hash rate is basically the power of each blockchain. So like Bitcoin has a very powerful blockchain, or a very powerful blockchain and hash rate, because there's so many computers running and mining this, so running nodes. Block times, block gas limits, and gas prices. As long as we can reach out to them uh, from the smart contract directly, they have to be verifiable by the EVM, Ethereum Virtual Machine. Some of these parameters are available to us already. Well, for others, we will need to wait a bit. Interesting. I would love to see other projects building a similar type of thing. I mean, this is so. I would love to see a Polkadot version of this. I would love to see a Cardano version of this. I'd love to see an Algorand version of this. Man, I think this could be huge. So, further, upcoming Ethereum 1.0 changes like EIP 2935 Buterin, right, will allow us to extend the blockchain native derivatives beyond what is currently possible with much stronger and safer settlement behavior. So the reason I didn't finish all this is because basically, it gets really nerdy. Like if you get into the nitty gritty details of crypto stuff, like these updates and these like forked things, I mean, it all comes down to governance and like how they want to do things moving forward. But I think looking back historically, it'll be interesting to study those things. I'm more interested in the macro perspective. That's like the nitty gritty details. So while there are other option protocols in the DeFi space and ones which could potentially host the simpler products that we are starting with, we see Euler as a future go-to venue for anything related to blockchain protocol trading. Whether these will be options, futures, or more exotic products, the team's protocol engineering experience is unmatched in the DeFi world. So who is Euler actually for? DeFi users are most likely to use Euler if they already have exposure to blockchain protocol parameters. Their operations rely on big shifts in the network behavior, manifesting via big hash rate changes, massive gas price movements, and protocol behavior changes. Who would that be? Exchanges that cover the highly volatile on-chain assets, withdrawal costs, miners having exposure to shifting block rewards and transaction fees, institutions with exposures to many blockchains and needing for hedging the protocol level risk. So very interesting. So let's just kind of skim through the rest of this. I think this is so interesting. This is another kind of in-depth thing. This is kind of the site is not so good. I guess I can show you that if you want, but I mean, the Euler the docs.euler network, again, it's obviously in beta, but it's not the best site, to be honest with you. It's really not that well created. I think they should have put a bit more time into it. So the initial version of Euler is currently in the beta testing mode with a small group of DeFi traders who will soon be released to the public. What is next? So I thought this was so interesting. All right, so I guess I can show you this Euler protocol, and then we'll wrap this up and kind of share my thoughts on Euler as a whole. So yeah, this is their Euler network website. I am not sure this is the best website, to be honest with you. I mean, they should have done so much more. But they basically talk about like you can trade it if you want, but there are a lot of risks. I really am waiting for this to get released to the public, because I would totally be in on the ICO. Like the initial coin offering. I mean, this is an incredible project. It's breaching into a huge market, and I think it has so much opportunity for the upside, because the derivatives market, while they're massive, have so much downside, because they're, first of all, really only available to the people, like kind of these um, manipulatable financiers, if you will, kind of like people that manage money, and not to the common folks. So I think this is very interesting, because it's kind of democratizing the ability to access something like oil. Like most people, you ask a random person on the street, do you own any oil? And they're like, maybe the oil in my car. So not a lot of people own, like, debts on oil companies, or derivatives of oil, or derivatives of gold or silver, platinum, uranium, any of these different things. But Euler specifically is so fascinating. I think this project has the potential to, yes, 1,000x, because first of all, hasn't been released in beta, so I think it could be huge for the future, if everything goes to plan. But it has this potential. I mean, none of this obviously is financial advice. Never invest anything you don't in anything you don't understand. Never invest anything more than you can afford to lose, and always do your own research. Link in the description for that video. So, in conclusion, I think Euler Network is very interesting. I think you should definitely check it out. We'll have the links to both of these in the description. As I said, Euler team, if you're watching this, you need some work over here. This Euler Network website is not so bueno. So, thank you very much for watching. If you enjoyed this video, please give us a like, subscribe, bell button all, like, subscribe, bell button all. And until next time, invest global. Peace.